Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil and the dollar surge, while Asian stocks and U.S. futures plunge after Trump imposes tariffs on Canada, Mexico, and China. Canada and Mexico both vow retaliatory measures. China says it will implement corresponding countermeasures and file a complaint at the WTO. The euro and futures also sink after Trump says levies on the European Union will definitely happen very soon. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. There is one thing and one thing only on investors' minds today, and that is the reaction to these tariffs that have been announced by the Trump administration. Remember, during the course of the campaign, when Trump was talking about tariffs, everyone said his bark was going to be worse than his bite. Well, he has bitten. And this is the reaction on markets today. Take a look at the handover from Asia Pacific, MXAP, down 2.8% as we gear up into the European session. S&P futures down 1.9%, NASDAQ futures down 2.5%. So a bloodbath going on in equities. Look at European futures as well, heading into the European session down 2.4%. Our colleague David Inglis was saying if we do open down about 2.8%, this would be the largest drop in over a year. So very, very substantial reaction that we're seeing on equity boards today. But let's just flip over. It's not just equities that we're looking at this morning. Also in cross-asset space, take a look at the reaction in the USD. Positive for the dollar, 1.1% this morning, so having ramifications across other currencies. The euro now trading at the lows of the year this morning. We spoke about the potential knock-on effects on Europe and the fact that Trump has been talking about potential tariffs on Europe as well. So that's the reaction in the USD. Two-year yields, you can see up 3.5 basis points this morning. And this is, again, in reaction to the inflationary impact of tariffs, what that could mean for the Fed interest rate cutting cycle. The market was quick to price in perhaps a slower rate cutting cycle in the front end. Further out the curve, though, not shown here, but 10-year yields are actually rallying a couple of basis points. So two-year yields are up, 10-year yields are down. Brent also in focus. Why? Well, if you consider the broad range of tariffs that were introduced, yes, 25% tariffs were introduced on broad Canadian imports, but oil also is receiving a tariff of 10%. So that is going to have knock-on effects on the supply of energy to the broader complex, even though some people are talking about the potential rerouting of some of that Canadian oil. But still, the impact this morning is notable on Brent. You can see trading up 0.8%. And then Bitcoin is down 3% this morning, but throughout the course of the last 24 hours, at one point was down 8%. So again, substantial market reaction today. Let's talk more about, though, what's been happening in Asia. And of course, April, China is very much in the eye of the storm, but Chinese markets are still out for lunar holidays. So what are we gleaning from other markets in the region?
Well, onshore markets are only back on Wednesday, but we do have the Hong Kong markets back to trade, and perhaps that move lower in stocks is being exacerbated by Greater China markets coming back online, including the TAIEX, which you're seeing the slump here partially to do with a catch down amid the scrutiny surrounding DeepSeek. But it's also interesting how when you look at the Hang Seng, it's not faring as badly as some of these other major markets in the region. And to some, this speaks to the idea that now that we have these tariffs announced, that China's going to pull out all the stops when it comes to support measures. So maybe it's a buying opportunity for Chinese stocks. Worth noting as well that we're not far from record lows on the offshore yuan. Now, worth highlighting as well, a couple of other things as well. When you look at Alibaba stock, it is the big boost for the region's benchmark today, and this is amid optimism surrounding its AI modeling. In terms of currencies, we're focusing as well on the rupee following the budget that was announced over the weekend. Big tax cuts there, but it hit fresh record lows earlier today, and part of the currency selling that we're seeing in the Asia Pacific. Jumana.
Yep, so semiconductors, the autos, there's all of these different sectors getting hit in Asia. Thank you, April Hong in Singapore. Now, President Trump warned the world that trade tariffs were coming, and now their impact is reverberating across global markets, as you've just seen. After imposing sweeping measures against China, Canada, and Mexico, he's doubling down, saying more will come and singling out the European Union.
It will definitely happen with the European Union, I can tell you that, because they've really taken advantage of us. And we have over a $300 billion deficit. I wouldn't say there's a timeline, but it's going to be pretty soon.
For more, let's bring in Bloomberg's Derek Wallbank. Derek, the president did tell our editor-in-chief on the campaign trail that tariffs were his favorite word in the dictionary. And, of course, he's taken it to task now with the application of these tariffs on Canada, Mexico, and further tariffs on China. Just talk to us first about the scope of these tariffs. Which products are actually going to be affected?
Well, Jemana, it's I think you're looking at the red across the market, as Avril was talking about, and you're seeing a whole lot of people moving to price in the reality that this looks like this is about set to happen, right? 25% tariffs on quite a lot of Canadian products, Mexican products set to go in place February 4. The one big sort of exception there's a reduced level for Canadian energy, but other than that, pretty broad across the board tariffs. Canada is readying their own response of 25% tariffs on quite a fair bit of American products. We're seeing some Canadian provinces go a little bit further and have individual restrictions. I've seen some that have said that they're going to maybe not have as much alcohol from red states, for example. So this is playing out in very specific ways as well as quite general. In addition to this, though, you did hear from the U.S. president talking not just about Canada and Mexico and China, but expanding further. He was upset about South African land policies, putting a stop to U.S. aid to South Africa that has been about $8 billion over the last 20 years or so. In addition to that, making the threats that you highlighted about the European Union, reiterating those threats, but doing so unbidden. That was not in response to a reporter, goading him. He brought that up himself to try and do that. So when you consider Canada, Mexico, the European Union, China, South Africa, that's quite a wide scope of global effect from the U.S. president now, just days into his second term.
Right, Derek, I think the big question for the investment community here is, are we going to start seeing a race to the top in terms of who's going to be applying the more onerous tariffs, or is this going to yield to some form of negotiation and a compromise between all of the various parties involved?
Well, let me say an answer to that two-part question, yes and maybe. As I said, Canada has already said that it's going to have retaliatory tariffs. China has said that it will respond in kind, but hasn't necessarily laid out what that would be. They're in a holiday right now, but coming to the end of that, so we should see some details on that soon. Mexico's talking about laying out its responses, and then Trump has an escalatory clause, I guess you could say, that he could trigger if there is retaliation to retaliate on top of that. At some point, if past is prologue, we get to a point where people stop raising on each other and then we start having talks. You and I have talked before about how sometimes Trump comes out and puts the end first and then says, right, that's the start of negotiations. So again, if past is prologue, you could expect some of that to happen, but there may be an awful lot of pain before that happens. Trump said some of this may be painful, but it's necessary and it'll be better off in the end.
Yeah, and as you're speaking, talking about pain, the Mexican peso is about 2.8% weaker this morning. Bloomberg's Derek Wallbank, thank you so much for the overview. Well, let's talk about the energy complex. Oil is trading higher after President Trump imposed tariffs on crude imports from Canada and Mexico, threatening higher costs for American consumers. So the Brent, as you can see in front of me, is up 0.7%, crude up 1.8%. Joining us now is Vandana Hari, founder at VANDA Insights. Vandana, let me just start off by asking you whether or not you see these tariffs as having a lasting impact on the price of oil and where it's trading.
Wow, that's the biggest unpredictability right now, Jumana. But you've started with a very good question, because that is like looking beyond the first day or the first week of these tariffs, which have really rattled the markets. My feeling, Jumana, is that this is a shoot first, talk later strategy by Trump. Nonetheless, it is aimed at the negotiations proceeding. And as we heard from some of the U.S. officials, through Friday and the weekend. Negotiations with Canada and Mexico are ongoing and will remain the case beyond the tariffs. So what then could happen is that as and when compromise is found, the two countries promise or pledge some actions that are satisfactory to the Trump administration. We could see the tariffs being watered down or rolled back. And right now, that's a huge unpredictability for the market.
Yeah. What about Canada and Canadian oil exports' impact on the global market? We know that in terms of counterparties for the U.S. and the U.S. consumer, Canada actually is the #1 import partner. But I was reading some articles over the weekend suggesting that some of the seaborne products will actually manage to be rerouted, and therefore we shouldn't really expect a supply disruption globally. Where do you stand on that debate?
Yeah, so there's many different routes this conflict could take, right? And we just spoke about one, whether even the tariffs remain. But essentially, tariffs, unlike embargoes, Jumana, this is essentially just putting a higher cost on the commodity. Now, whether that cost is borne by the supplier or by the buyer in the U.S. or perhaps split between the two and passed on in some form to the consumer remains to be seen. As far as the flows are concerned, and this is where the oil market will be really hyper-focused in the coming hours and days, we're looking at nearly 70% of overall U.S. crude imports from these two countries, amounting to about 4.5 million barrels per day, of which about 4 million barrels per day come from Canada, about 500,000 barrels per day from Mexico. Now, there is quite a difference between the two, aside from the volumes, in that Canada is far more constrained in finding alternative markets to its crude. The vast majority of its crude, over 90%, goes to the U.S., and for good reasons. It really doesn't have the infrastructure to send that crude elsewhere, certainly not in a short period of time. There is the Trans Mountain Expansion Pipeline, which created 590,000 barrels per day of additional capacity for Canada to move crude out of its west coast, some of which has started going to China, India, other places in Asia. But I would say perhaps it could send another 200,000 barrels per day or more on that pipeline, not much more. Mexico, on the other hand, does have the ability to direct much of that 500,000 barrels per day that it sends to the U.S. to other markets. Again, though, however, it will come at a huge cost, both to these countries as well, because the suppliers will, if they're sending crude on a longer haul to more distant markets, then they have to take a discount for that, right? So one way or another, the suppliers in both these countries are going to hit, as are the U.S. consumers, Jumana.
Yeah. Thank you for breaking it down for us with the detail and the numbers there. Quite staggering how much of that Canadian oil is imported by the U.S. consumer. Another big question. I think President Trump surprised everybody in his Davos address by literally directing a little segment of it at OPEC Plus. How likely is it that this jawboning out of the U.S. president is going to influence OPEC Plus's decision-making and their slated production schedule for the rest of this year?
Yeah, I don't expect OPEC Plus to heed Trump's demands or request, whichever way you want to see it. Look, OPEC Plus has been crafting its supply strategy very, very carefully, calibrating it very finely, especially through the second half of last year when we saw them twice postpone the unwinding of the 2.2 million barrels per day of cuts. That volume is now scheduled to come back into the market gradually over a period of 18 months, starting the 1st of April. As of now, I don't see any reason for OPEC Plus to further postpone that. The 8 members that are contributing this 2.2 million barrels per day of cuts, I would imagine, are quite anxious to bring that oil back into the market. And crude is comfortably been in the high 70s, low 80s, so not really threatening the $70 Brent level that I believe OPEC Plus would want to defend. So no pressing reason to keep that in the ground for any longer. Putting more oil than that on the market simply because Trump is asking, again, is out of the question, Jumana. I think OPEC Plus is wary of oversupplying the market, especially a lot of analysis out there, projections for the market to be slightly oversupplied this year. And they certainly wouldn't want to tilt that more into an oversupply by putting even more oil into the market.
Yeah. Vandana, always good to talk to you. Thank you so much for joining us today. Big Markets Day. Vandana Hari, founder at VANDA Insights. Now, still ahead, hear why UBP's global head of FX strategy expects gradual weakness in the Chinese yuan. More on their outlook for bonds and currencies next. This is Bloomberg. All right, well, we are keeping a close eye on markets this morning in reaction to President Trump announcing those tariffs and the imposition of tariffs on Canada, Mexico, and China. This is the handover from Asia Pacific. Markets down 2.8%. A lot of red on the screen this morning. S&P futures also down 2%. Euro stocks also getting concerned about the potential of tariffs on European products as well. So a lot of red. Joining us for more is Peter Kinsella, global head of FX strategy at UBP. And in a moment, we'll pull up the FX reactions in those corresponding currencies. Canadian dollar is down about 2% today. The Mexican peso down 3%. Well, there you have it, some of the reaction here. So Mexican peso down 2.8%, Canadian dollar down 1.5%. First of all, let me just start off with those specific currencies, the ones that were targeted. Is this reaction warranted?
It absolutely is. I think certainly what we've seen is that the tariffs are larger than we'd anticipated to begin with. And whilst that's kind of been priced into the peso, which is weakened by probably 25% plus since June of last year, that the weakening in the Canadian dollar has been far less severe, I would say. So what we're seeing in CAD is probably a reasonable reaction today. And certainly what you're seeing with the broader dollar index probably makes sense, just in the context that now we've got higher levels of uncertainty, still elevated front-end yields in the States, and that's basically good for the dollar, right? Particularly when you've got this uncertainty premium, which we're going to have probably for another 3 or 4 months until we get some more, I would say, clarity on tariffs, countermeasures, and then an eventual renegotiation. But so in the meantime, that's basically going to be good for the dollar and bad for everybody else.
Yeah, so tactically, would you recommend for people to be long the USD here simply because of everything that you listed, the uncertainty and the fact that this is probably just a stepping stone towards negotiation, but in the absence of negotiations, dollar is probably the likely beneficiary?
It pretty much, yeah. I think that there is a slight difference from 2016, 2017 in the context that the starting point is very different. The dollar's valuation is much higher today than it was then. Positioning is incredibly long the dollar now. Wasn't the case at the time. And likewise, we're at a different point in the cycle. The Fed was then beginning to raise rates. We're now seeing the Fed kind of probably in a pause, but in a broader cutting cycle. So it kind of limits the extent of dollar appreciation, which we're likely to see. Probably something between 2 and 3% in the coming months would be feasible, but I don't think an awful lot more than that.
Well, China's been off for Lunar New Year the past week. There's a lot for Chinese markets to contend with when they come back again. Yuan obviously going to be in focus again. Do you think the PBOC are going to try to push back against the weakness?
For sure. I think if you look at what the PBOC is saying and doing, they're now focusing on, previously it was increasing currency flexibility, and now it's on improving currency resilience, which tells you that they're moving towards a risk management framework, i.e. just trying to slow the pace of yuan weakness. If you look at the 2-year swap spread, that's probably consistent with dollar yuan, well above 735. They've already allowed it to go beyond 730. That was the line in the sand beforehand. It's clear to me we're likely to see 740 at some point this year.
What does that mean then for the rest of the world?
It basically means that we're just going to have a bit, I would say, stronger dollar, slightly weaker, in the short term. And then everybody else, the key trading partners, which are most affected by tariffs, they're just likely to weaken. That's what we're likely to see. Yeah,
well, we're seeing it in the euro this morning. Trump strongly hinted that Europe was coming next. They're next in line, yay. So the currency is now trading at the lows of the year. And obviously the dynamics are very different in Europe as well. You've got a very weak growth backdrop. You've got an ECB that are clearly very intent on the cutting cycle. Do you see euro heading towards parity by the end of this year?
So I don't, in the sense that what we saw earlier this year, what we saw in 2022 when euro last traded parity was it had a huge terms of trade shock with the war in Ukraine and so on. And euro's trade surplus went from an enormous trade surplus towards a deficit within the space of 6 months. That's simply not the case now. Oil prices are falling, etc. So that sort of large current account surplus is a big, I would say, a big underlying demand. It's probably a big underlying demand story for euro. So even if we trade towards parity, we're not going to be there for long. And historically, that's always been a really good level to buy the euro. So, what I'm telling my clients is we're unlikely to see parity. If we do see it, you need to be buying euro at those levels.
Interesting. The pound, let me ask you about that. We've got the Bank of England coming up this week. The pound is, it's always quite volatile.
Yeah.
British markets tend to be quite volatile, whether you're talking about fixed income or the pound. But it's gone from the worst performing currency to actually performing quite well the last couple of weeks. What's going on there?
Well, look, I think for the BOE, you're likely to see a rate cut. That's fully priced in. We've got some concerns vis-a-vis the development of gilts and gilt yields. They've really been extremely volatile in recent months for good reasons. I think that the pound is probably one of the least affected currencies by a trade war, because although it's got a trade surplus with the US, it's just reflecting the fact that that's mainly a services surplus rather than a goods surplus. And really that limits the impact of tariffs on the UK. So sterling will probably outperform the euro and a few of the other crosses in the short term. But the overlying dynamic for sterling is going to be tricky in the short term.
Yeah, good place to leave it. Really great to have you
Thank
on.
you.
Thanks for paying us a visit in Dubai. That was Peter Kinsella, Global Head of FX Strategy at Union Bancaire Privée, UBP. Now, coming up, authorities in Congo say more than 700 people have died. We get the latest from the conflict between the DRC and M23 rebels later this hour. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Bersetchi in Dubai, and we are keeping a close track of what is happening in these global markets today. Take a look at equity futures. This is the reaction to the announcement out of the Trump administration that they're going to be imposing tariffs on Canada, Mexico, and China from tomorrow. So S&P futures down 2%, NASDAQ down 2.7%. Eurostoxx futures also scaling lower, 2.7%. And according to our colleague David Inglis, if they open down 2.7%, this would be the largest drop for European futures since, in the last 18 months. So quite sizable reaction we're seeing on the boards today, but not just in equities as well. Fixed income, we're seeing a reaction. Two-year yields are up, accounting for perhaps the inflationary impact of tariffs. But further out the curve, we are seeing 10-year yields trend lower, 3 basis points lower. So 2-year up, 10-year down. And then a quick look as well at oil, because this is the impact on the oil markets. We are seeing a bit of an uptick in the price of Brent. When we come back, though, we're going to be talking about some of the regional developments. Stay with us. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil and the dollar surge, while Asian stocks and U.S. futures plunge after Trump imposes tariffs on Canada, Mexico, and China. Canada and Mexico both vow retaliatory levies. China says it will implement corresponding countermeasures and file a complaint at the WTO. The euro and futures also sink after Trump says levies on the European Union will definitely happen very soon. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joanna Bersetchi in Dubai today. It is all about tariffs and tariffs only. This is the reaction from markets. Huge amount of red on the screen behind me. Asia Pacific handover very weak. Chinese markets still closed for Lunar New Year, but quite the handover we're getting from Nikkei, from the Taiwanese index, semiconductors, automakers, all trading deeply in the red this morning. So 2.9% is the handover from Asia Pacific. U.S. futures, S&P futures down 2%, NASDAQ down 2.7%. And of course, the concern there is further geopolitical tension, the impact that all of this is going to have on potential earnings. Remember, we have earnings season season coming up, the outlook. I posted a chart this morning talking about how tariffs and the mention of tariffs in all of these earning calls has shot up to unprecedented levels. So CEOs are really worried about the impact tariffs are going to have on their business. And then take a look at this. European futures also down 2.9% this morning. Yesterday, in a very nonchalant fashion, President Trump also seemed to imply that European tariffs were coming next. So something to watch out for the European continent. But of course, not just equity futures reacting. We're seeing a big cross-asset move as well. The dollar, no surprise here, but seeing a bit of an uptick given the safe haven and flight to quality, geopolitical tension. All of that is benefiting the USD here, up 1.2%. And then two-year yields also up 4 basis points. Why? Well, investors have been quick to price out rate cuts into the curve, but also price in the inflationary impact that tariffs could have. So two-year yields are up, and actually not shown here, 10-year yields are about 3 basis points lower. So interesting dichotomy going on in the U.S. fixed income curve. Brent also seeing a bit of love this morning, up 0.8%. There on some concerns about oil supply disruption, given about, Canadian oil exports are being also tariffed at 10%, lower than the 25% for other goods, but still significant. And then Bitcoin also losing a bit of ground this morning, down about 4%, at one point down 8% as well. So a lot of huge market reactions on the screen this morning. But let's talk more about the scope of the goods. President Trump's tariffs on goods from Canada, Mexico, and China are set to hurt U.S. households, with consumers set to pay more for everything from fruit and vegetables to cars and electronics. Bloomberg's Rebecca Chung-Wilkins joins us now with a breakdown of the top imports from those countries. Rebecca.
Thanks, Jumana. Yes, I mean, let's take a look, because it's three quite different stories when it comes to China versus Mexico versus Canada. China first, and the story really is a consumer story here. We're talking about mobile phones, computers, toys, clothing, white goods, and that sort of category. Now, that's quite distinctive. We can flick the boards to talk about Mexico, where the focus is much more on autos, vehicles, by far and away the top item there, but also some electrical components, some computers also playing through. And finally, when it comes to Canada, there's a little bit of that autos theme, but of course, as we know, crude oil really dominating here. And crude oil also selected by Donald Trump as sort of the slight exception to that 25% tariff. We know that just a 10%, so a slightly more reduced, restrained hit on tariffs when it comes to crude oil. But otherwise, we are also, again, looking at autos and a little bit at the commodities space. So three quite different stories when it comes to U.S. imports from these countries.
Yeah, well, earlier on the show, we were talking about the fact that 70% of the oil imported by the U.S. consumer comes from Canada. So you've got to expect some form of a repercussion on those markets. Rebecca Chung-Wilkins in Hong Kong, thank you so much. Well, joining us to discuss more about the potential geopolitical impact is Christopher Smart, managing partner and founder at Arbroath Group. Really good to have you with us, Christopher, on such a huge day for markets. Now, I was saying earlier on in the show that on the campaign trail, people were saying that perhaps Trump's bark was going to be worse than his bite. But of course, now the bite has happened with the imposition of these tariffs. Well, what do you see as the potential geopolitical ramifications of the fact that the Trump administration has actually gone and applied tariffs on even a close trading partner like Canada?
Well, Jumana, great to be with you. I think the geopolitical implications are more or less in line with what we've expected. A very confrontational administration and a president who is eager to deploy these tariffs that he says he loves to use. I think what is a little bit surprising that finally the markets are taking note of this, and the fact that he is imposing them on close allies and close trading partners, I think still comes as a little bit of a shock. We heard the other piece in the president's inauguration address was the establishment of an external revenue service, and he keeps talking about this as going to be an additional flow of revenue to the U.S. budget. But I think most people have to think about this still very much as a negotiating strategy, maybe a little bit aimed at getting some change out of Mexico and Canada. But I think the real target, the real audience here is in China, to get the attention of officials in Beijing that he is serious about inflicting serious pain on trading partners, even if there is a cost to Americans in the short term.
Yeah, I guess one of the big questions is whether this is all just a negotiating tactic or whether these tariffs are set to be long-lasting. And you've got to think, if the impact is going to be inflationary on U.S. consumers or if it's going to be detrimental for U.S. GDP, at some point President Trump is going to say, actually, no, I'm not going to continue along this path because at the end of the day, it might impact him personally.
Well, as you know, he measures his success very closely with the fate of the U.S. stock market. So we'll actually see, it's been something of a mystery to those of us looking at political developments in the U.S., the policy this administration is taking all along, that the stock market has been so nonchalant about some of these threats, and now it clearly is beginning to price these in. I still believe these are negotiating tactics, or at least that the tariffs on Mexico and Canada aren't going to be very long-lived. But in the meantime, they could be even shorter-lived if the pain in the stock market continues through the week.
What do you think a deal with China actually looks like? To go back to your original point of him wanting to send a strong message to President Xi.
Yeah, I think that's a really great question. And when I talk to my clients, it's hard to know if you were Xi Jinping, what would you do? What could you do if you wanted to avoid tariffs? What would it take? Obviously, if you're looking at this from the trade deficit point of view, there are a lot of structural issues that China needs to address to stimulate domestic demand that might do a lot more for China so that it relies much less on exports and has much less surplus capacity that it pours into foreign markets. But it also seems like the president is using this as a way of reducing the U.S. dependence on China, in particular when it comes to steel and pharmaceuticals. And there are just other issues. He's threatening China with tariffs in order to complete his transfer of the ownership of TikTok and the crackdown on fentanyl. So, there's a lengthening list of demands that he has. And I think he'll just try and get as much as he can while the pressure is on.
Yeah, what do you think countries around the world should do to deal with the fact that we do have an unorthodox and quite disruptive president back in the White House? No country seems to be safe. He was also tweeting about South Africa this morning as well, hinting at tariffs in the European Union. What should these countries do? Should they wait for the tariffs to be applied and then try negotiating, or try to preempt it and sort of bring a deal to the table before the tariffs even get announced?
Well, again, this is, I think, part of the negotiating strategy, to be as demanding and outrageous and push as far as you possibly can, even before the negotiations start. And so you get your trading partner, your negotiating partner, to essentially make concessions even before you've come to the table. So I think, most negotiators would tell you should wait till you get to the table and see what really can be done. But it is quite remarkable how many different avenues of negotiation this president has opened in, less than 2 weeks. Let's remember that he has been in office.
Yeah. Christopher, great to get your perspectives today. Thank you for staying up late for us in Boston.
Good to be with
Christopher
you.
Smart, managing partner and founder at Arbroath Group. Thank you very much. Well, over to regional politics now. Israeli Prime Minister Benjamin Netanyahu is scheduled to meet with President Trump on Tuesday in Washington. He'll be the first foreign leader to visit since Trump's return to the White House. The meeting comes with U.S. and Arab mediators set to begin negotiating the next phase of a ceasefire agreement to wind down the 15-month war in Gaza.
In this meeting, we'll deal with important issues, critical issues facing Israel and our region. A victory over Hamas, achieving the release of all our hostages, and dealing with the Iranian terror axis and all its components, an axis that threatens the peace of Israel, the Middle East, and the entire world.
Let's now bring in Bloomberg's executive editor for Middle East, North Africa, and Russia, Stuart Livingston-Wallace. So President Trump is going to be very busy this week between tariffs and meeting with Prime Minister Netanyahu. What do you think they're going to be discussing at this meeting, and how significant is it that Netanyahu is actually the first foreign leader to pay a trip to the White House with President Trump back in office?
Yeah, I mean, I suppose arguably you could say it's one of Trump's foreign policy successes so far. In the context of what's happening today, that's sort of rather stark. Arguably, though, the more important meeting is perhaps with Witkoff, who is rather Trump's Middle East envoy. And I think at least in part can claim some of the credit for the existing ceasefire you've seen in Gaza. He kind of bulldozed it through, and rather successfully. So that meeting takes place today, and I think that's when you're going to see the contours of what phase 2 is going to look like. And yes, we had the Qataris out yesterday saying the talks must start. Yeah. I'm sure Egypt would say something similar, but the reality is that meeting today will be critical.
So there are many within the Israeli cabinet who would like to see the war restarted once the full release, the release of all of the hostages has been completed. What is stopping Netanyahu from restarting the war?
I think ultimately it's going to be US pressure to some extent, because Trump, I rather think, probably doesn't want a resumption of hostilities, and not necessarily because he feels particularly strongly about it, but it's a distraction. And he made it very clear coming into office for his second term that he basically wanted all of these conflicts resolved. So that applies to Gaza, Lebanon, to some extent to Iran, obviously Ukraine, Russia. Basically, he doesn't want fighting because it just distracts his administration from doing its domestic policy.
Yeah, slightly different tact of the weekend. I thought it was interesting. Ahmed Shara, the leader of the transitional government in Syria, met with MBS in Saudi Arabia. Is that a big deal?
Yeah. I think, again, it's a signal of a reorientation of loyalties and alliances within the Middle East. So specifically in the case of Syria, away from Iran and towards Saudi Arabia. Now, here is the problem, though. If he's expecting that Saudi Arabia is going to open the purse and rebuild the entire country, that seems unlikely. Saudi Arabia has its own domestic priorities, very, very serious ones. And yes, it is an incredibly wealthy country, but even its wealth is limited when you have to prepare for I don't know how many events they've now signed up for.
Yeah, but still notable. Here we're showing up the footage there of the two leaders meeting. So a big one from Saudi Arabia's perspective. Stuart Livingston-Wallace, Bloomberg's executive editor for Middle East, North Africa, and Russia. Thank you. Well, coming up, Dubai's new ultra-luxury homes designed to court the ultra-rich with price tags of up to $120 million apiece. A closer look next. This is Bloomberg. All right, we are keeping an eye on markets this morning. This is the reaction and the handover. Asia Pacific down 2.9%, even though Chinese markets are closed for trade. But strong reaction in automakers in Japan, semiconductors in Taiwan. All of this in response to the new tariffs applied by the Trump administration will be applied to China, Mexico, and Canada. S&P futures down 2%, NASDAQ down 2.7%. And then European futures also in the eye of the storm, with the president insinuating that Europe could be next on the list as well. So a lot of red on the screen this morning. But moving to something slightly more uplifting, Dubai is adding luxurious mansions and penthouses, some fitted with cinemas, spas, and private elevators as developers try to lure rich customers worldwide. The new ultra-luxury homes are priced from $60 million to over $120 million. And Dubai is bucking a global trend as prime residential prices are slowing in many other international markets. Let's now bring in Zainab Fatah, Bloomberg's Middle East real estate reporter. Interesting story. Also interesting to see that this ultra high-end part of the market in Dubai continues to rise. The outlook is still pretty positive for this year.
It's really an explosion of luxury development in Dubai, because since 2020, we started seeing in 2021 the moving waves of rich oligarchs from Russia and so on after the sanctions were levied there. But that seems to have carried on with a lot of new people coming from Western Europe, Asia, some from China, and the Americas, developers tell me. So there is more and more wealthy buyers who are willing to come and pay top dollars for homes that developers are trying to outdo each other in trying to offer better services, more amenities, and better experiences for people who come to the region and spend only a few months. These are second homes, third homes. They're not really primary residences most of the time.
Yeah, things like helipads as well, and all these extra features that come along with it. From a developer's perspective, how profitable is this part of the market? I mean, you look at these prices and they're staggering for the rest of us. Is it actually profitable? Is it a profitable segment for developers to be involved in?
It's probably the most profitable segment for them. But the issue is it requires a lot of investment up front on the design process, on getting the right collaboration between the companies or the hotel operators who are going to manage some of those, for those who want their homes operated by five-star hotels.
Yeah.
That kind of thing requires a lot of work up front and a lot of investment, and that's what keeps an elite number of developers, chief among them. For the mansion side, there is one called Palace Group, and on the apartment side, there are a couple like Sankari Group and Omniat. Those really build some of the most exclusive properties, mostly beachfront. You're always looking at the location. Those residences, to be able to kind of command these top prices, you need to be beachfront and you need to be in central locations.
Yeah. I mean, you drive around and you see construction everywhere. At some point, you've got to think supply will outstrip demand. What is the outlook for this year?
So the outlook for this year is still positive, although we're starting to see some apprehension that supply at some point is going to outstrip demand, and you might see prices correct in a bit. For policymakers in Dubai, that's not really a problem, because they do actually want to see the market becoming more affordable. They don't want Dubai to be known as a very expensive destination, and that way people will stop coming. So for them, they see this as just a way to balance the market.
Yeah, so interesting. Zainab Fatah, and of course, heading back to her super luxurious penthouse in one of those properties.
No, I wish.
Same over here. We can dream. It's Monday, Zainab. Zainab Fatah, Bloomberg's Middle East real estate reporter. Thank you very much. Well, for more of these stories, looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. Coming up, the DRC says almost 800 people have now been killed after rebels seized the city of Goma. The latest on the regional response next. This is Bloomberg. Congolese authorities say at least 773 people were killed last week in the eastern city of Goma and its surrounding areas. That's amid fighting with Rwanda-backed rebels who captured the territory in a major escalation of a decade-long conflict. Let's get more with Bloomberg's Ray and Lovo. Good to have you with us on the show. So several meetings have been held over the course of the last few days, but over the weekend, a meeting was also held by South African leaders. What was the outcome of that meeting?
Good morning, Jumana. So indeed, the Southern African Development Community leaders held an urgent summit over the weekend in Harare, the capital of Zimbabwe, where they came up with resolutions. And among these was a condemnation of the conflict in the Democratic Republic of Congo, in particular condemning the actions of the Rwandan Defense Forces and the alleged links to the M23 rebels. And the other main outcome is the SADC leaders, as they are called, calling for a joint summit to be held with the East African community leaders. Prior to this meeting that took place on Friday, there was another meeting which was done by leaders from East Africa to find ways to solve the conflict and end the conflict in the DRC.
Is it actually going to have any impact, though? Is there an expectation that the conflict will ease after these meetings?
I think it's too early to say. What we do know at this point is that Rwanda, over the weekend yesterday, in fact, the Rwandan Foreign Affairs Ministry responded and said they welcome an engagement between the two blocs, the East African community and the South African Development Community coming together and, trying to find a way to end this conflict. But again, in that same note, in that that came out from the Foreign Affairs Minister of Rwanda, they rejected that accusation against the Rwandan Defense Forces, and they said that they are not complicit in attacking any civilians. So there still is some ongoing tensions between Rwanda and the rest of the South African development community, but the fact that they are willing to have that engagement does send a positive signal at this point.
Yeah, absolutely. Let's keep a close eye on how this all pans out. And as you're speaking about, it's swiftly become a humanitarian crisis as well. Bloomberg's Ray and Lovo, thank you so much for the latest report. Now, Donald Trump says the U.S. is to stop sending aid to South Africa over its land expropriation policies. The U.S. president's comments come less than 2 weeks after Cyril Ramaphosa's government signed a new law making it easier for the state to expropriate land subject to equitable compensation.
Terrible things are happening in South Africa. The leadership is doing some terrible things, horrible things. So that's under investigation right now. We'll make a determination. And until such time as we find out what South Africa is doing, they're taking away land, they're confiscating land, and actually they're doing things that are perhaps far worse than that.
So it's not just Canada, Mexico, China, potentially the EU, but also South Africa now. President Trump is saying that the leadership there is doing, quote, terrible things because of the land expropriation measures. Also seeing an impact on the rand as well. It slid about 1.8% this morning in direct response to those comments out of President Trump. Not just the rand, of course, equity futures slipping across the board. The handover from Asia really negative today, down 2%. U.S. futures leaning towards the red too. Euro stocks futures down 2.7%. As well, in anticipation of some tariffs to be applied on European goods too. So huge market impact this morning. Now, coming up in the next hour of Horizons, Jennifer Zabazaja will be joining me live from the Mining Indaba conference in Cape Town. She'll be speaking to Shirley Webber from Absa CIB and Mukwandi Chibesakunda from Zanaco. And we're also live in Mumbai to speak to Sajjid Chinoy. We'll be back in a moment. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Oil and the dollar surge while Asian stocks and U.S. futures plunge after Trump imposes tariffs on Canada, Mexico, and China. Canada and Mexico both vow retaliatory levies. China says it will implement corresponding countermeasures and file a complaint at the WTO. The euro and stock futures also sank after Trump says tariffs on the European Union will definitely happen very soon. Well, good morning again, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Bersachi in Dubai, keeping you up to speed on all of these tariff announcements. Jen, it has been quite the morning.
Yeah, Jumana, it's been quite the weekend as well, especially here in South Africa. I'm Jennifer Zabazaja in Cape Town. It's just gone past 7 a.m. Welcome to the second hour of Horizons Middle East and Africa. And I'm actually live at the African Mining Indaba conference. It happens every year, but of course this year is proving to be a lot different because going into this, we were thinking about the tariffs that were happening between the U.S., Canada, and Mexico. Now we have the added element of potentially South Africa also being involved in this. But a lot of mining executives, leaders and representatives from countries here to figure out how Africa can benefit from the mining industrialization here. But now a lot of geopolitics now going to be factored into the discussions over the next few days.
Yeah, quite literally trumping the discussion. There you go. Jen, looking forward to your interviews. We've got a couple coming up in the next hour. So let me get through these markets pretty quickly. It is a sea of red out there. Very negative handover from Asia Pacific. As you were talking about, Chinese markets still closed for Lunar New Year, but the likes of South Korean stocks trading deeply in the red. Nikkei also handover very negative there as well. So 2.9% for Asia Pacific. U.S. futures down 2%. NASDAQ down 2.7%. More earnings coming up this week, but today nobody really cares about earnings. It's all about tariffs and the geopolitical implications of that. And then we have Euro Stoxx futures also down 2.7% as well as we head into the European session. And here, because of anticipation that the next sort of line of attack will be on European products. And so the reaction is being felt there as well. It's not just Canada, Mexico and China that are in President Trump's sight, but also European Union. And as we were just speaking about with Jennifer, South Africa too this morning. Flipping over, let's take a look at other cross assets. The reaction to the dollar has been pretty pronounced as well. 1.1% is what we're seeing. So money keeps going into the USD, even though our guest earlier on the show was saying that positioning is quite long already. But that being said, there aren't that many safe haven currencies to be going into right now. So the dollar is where you want to be. 2-year yields down 4 basis points, up 4 basis points, I should say. Again, as markets price out some of those rate cuts into the front end of the U.S. curve, the inflationary impact on tariffs is affecting 2-year yields. Brent also up almost 1% this morning. This based on the fact that even though the Canadian oil exports are only subject to a tariff of 10%, it's still going to hit the oil sector. So the market is accounting for that. And then Bitcoin actually losing some of its steam in the last 24 hours, down 4% today in trading. But let's go back to the top story. President Trump's tariffs on goods from Canada, Mexico and China are set to hurt U.S. households, with consumers set to pay more for everything from fruit and vegetables to cars and electronics. Bloomberg's Rebecca Chung-Wilkins joins us now with a breakdown of the top imports from those countries.
Yes, Jumana. So 3 of the US's biggest trading partners, all tariffed, but 3 very different stories and 3 very different economies that we're talking about. When it comes to China, it's really a consumer story. So we're talking about mobile phones, electrical goods, clothing, computers, toys, and that sort of thing. And that's quite different from, say, if we can just shift the boards to look at Mexico, where the story is really all about autos there. Vehicles, the top category there, but also car parts, passenger cars, trucks, and some element for electronics and white goods as well. There's a little bit of that comes through if we look at Canada finally, but really Canada, the top story here is, as we know, on crude oil. We've discussed already, such a major component when it comes to the US, and crude oil was sort of dealt something of an exemption. So 25% tariffs across Canadian goods by and large, but for crude oil that was restricted somewhat to just 10%. Elsewhere for Canada, we're also looking at autos similar to that Mexico story and a couple of commodities, but it's very much that energy story that's in focus for Canada.
Yeah, and not just for Canada, but for the rest of the world as well, which is why we're seeing the impact in where oil is trading today. Rebecca Chung-Wilkins in Hong Kong, thank you so much. Well, as the impact of tariffs reverberates around the world, President Trump also singled out the European Union.
It will definitely happen with the European Union, I can tell you that, because they've really taken advantage of us. And, you know, we have over a $300 billion deficit. I wouldn't say there's a timeline, but it's going to be pretty soon.
For more, let's bring in News Desk editor Jill Desis. Jill, well, he did actually warn that tariffs is his favorite word in the dictionary. So now we know that these tariffs are actually going to be implemented with Canada, Mexico, China, talking about the possibility of tariffs on European Union and then tweeting about South Africa this morning. It seems like no country is safe.
Yes, that's right, Jomana. I mean, I think, you look at those EU remarks, that's something that Trump has actually kind of intimated before, that he would go after the EU with tariffs. Now you've got him saying explicitly, as you just heard him there, that it definitely will happen. That news actually sent some European stock futures lower this morning during Asia hours, really kind of capturing there this idea that, as you said, nobody is spared from these tariffs. Jomana, this actually marks a pretty significant contrast Trump 2.0 versus Trump 1.0, his first term in office, when a lot of the impacts from tariffs were, pretty squarely focused on China being the number one there. So you had Trump really focusing on adversaries. This time around, though, as we've seen, particularly with these Mexico and China tariffs set to go into effect fairly soon, that really it's allies that are in the crosshairs now. So even though you've got, in the case of Mexico and China, where, during his first term in office, they actually renegotiated that key, North American trade agreement, you now just see them, continue to face, a lot of this pressure from Trump. And yes, I think, we're still waiting for more on what these European tariffs could ultimately entail. But, Trump, does seem to be very serious about this. So I'm sure that if he's saying that we can expect something too soon, we will indeed get something pretty soon.
Yeah, and how are these countries retaliating? What has been the response so far from the likes of Canada, Mexico, and China?
Well, so far, what we've really heard from Canada, at least, is that they do plan on their own retaliatory 25% tariffs. They're specifically looking at goods such as beer and bourbon. There could be more that ultimately is encompassed there. We're actually expecting to hear a little bit more from the Mexico side when President Claudia Sheinbaum actually talks on Monday. So there could be some more on what exactly Mexico's retaliatory efforts would be. Of course, Trump, though, has said that, he's kind of, carved out some room for him to retaliate. Once again, if there are some of these retaliations, he actually does say that he wants to speak with both Canada and Mexico on Monday. So we'll kind of see how that develops. Again, very, very rapidly developing situation. On China, we're not hearing a ton publicly, at least just yet. Remember, that country is still in the midst of the Lunar New Year holiday. So that could be part of the reason there. But the Wall Street Journal is actually reporting that there's some measures that China is considering dating back to their original Phase 1 deal under the first Trump administration that was never really kind of put into effect there. So yes, lots of moving parts here, and I'm sure even just over the next 24 hours, we're likely going to get some more on what some of these retaliation, efforts kind of look like and where we kind of go from here.
Well, you say 24 hours. We've actually got a countdown clock on our show now. It's 23 hours and 50 minutes until the tariffs get imposed. News Desk Editor Jill Deeses, thank you so much for the latest.
Now, the African Mining Indaba here in Cape Town is underway, just about to get underway. The conference is a hotspot for deal-making for the continent's mining industry. Now, it comes as South Africa's mining industry has been hampered by infrastructural damages, challenges. There's also poor economic conditions and the threat of potential tariffs from the U.S., which, of course, we just got a bit of that threat overnight. Joining us now is Shirley Webber, the managing principal for resources and energy at Absa Corporate and Investment Bank, joining us here on set at the Mining Indaba conference. Shirley, thanks so much for being here. So I want to get your reaction first to what we did here overnight from President Trump. South Africa now potentially directly in the firing line. How could that affect the economy here from your perspective?
Look, the mining economy is quite important for South Africa as well and for the African continent. The reality is we do sit with many minerals and metals that the world actually needs, for a transition as well. And if you look at PGMs, not many countries have PGMs, so, imposing tariffs on commodities like that will really actually not just impact South Africa, it will impact the world, ultimately. Because what do we need for the transition? Things like fuel cells, things like auto catalysts. Everyone is obviously driving a motor vehicle. So I do think there will be sensitivities around this, but not just South Africa. The whole of Africa have the minerals and metals that the world needs for moving to a greener economy for each and every country. So I think it's early days, and hopefully sanity will prevail.
Well, what does that mean potentially for prices? You mentioned PGMs, platinum group metals. We've also seen a number of commodity prices dropping over the past few months. If this tariff talk continues to ratchet up, do we see prices continue to tumble?
I don't think, commodity is cyclical. So we will see ups and downs, etc. Depending on the commodity, depending on the supply out there. If I look at PGMs, if you look at copper, for example, as well, how many ore bodies are out there to be discovered still? So I do think Africa is in a good position. We just need to make sure that we as African countries make sense of it and try and invest and try and create investment opportunities for the outside world.
What are some of those investment opportunities you're noticing in the activity that we're seeing right now?
So there's a lot of activity on the copper side. If you look at Zambia, if you look at the DRC, but that comes with obviously requirements for better infrastructure, and you rightfully said it. We need to make sure that infrastructure are built We're talking about Roil, we're talking about value chains that needs to be built as well. And we don't have to do 100% of the value chain, but at least a portion to make sure it happens within the boundaries of the country to help the economies and a bit of growth in our African countries.
But are we seeing that, and especially when it comes to downstream, right? And there's a lot of the exploration that happens here, but the downstream execution isn't always left here on the continent.
No, you're absolutely right. The mining is happening, the extraction is happening. We see infrastructure being built slowly but surely and more slowly. But the value chain activities needs to be built. The beneficiation part is very, very important. And you've seen snippets of that, for example, in the diamond industry, you know, where there's beneficiation happening in Namibia, in Botswana a lot, as well as in South Africa.
So then what's your expectation for this mining in Daba? Do you believe that we'll see increased steel activity between African nations and China and, you know, Belgium, some of these other countries that are coming in here?
There's definitely going to be a lot more investment opportunities, but it's up to the African countries to make sure we make it attractive for companies to come in, and it becomes literally working together with external stakeholders like private equity, like funders, etc., to ensure that we can actually get a project up and running, but beneficiation must be part of it.
But we've heard that for quite some time, right? So then, is it the African countries that need to be a part of that, or need to be the ones to create the beneficiation, or is it a lot of these other mining companies that have been here for decades?
Look, many of the mining companies must be part of it because it's very capital intensive, but it cannot be done in isolation. African countries do need the private investment to come in, and hence we saying earlier, it doesn't need to be 100% beneficiation. You know, at least just get the next 2 steps in the whole value chain, and then it can be exported for further processing.
All right, so we'll wait to see what comes out of this conference here. Thanks so much to Shirley Webber, Managing Principal of Resources and Energy at Absa CIB. Now, coming up, Israeli Prime Minister Benjamin Netanyahu is set to meet with U.S. President Donald Trump in Washington. More on what is on the agenda next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Israeli Prime Minister Benjamin Netanyahu is scheduled to meet with President Donald Trump on Tuesday in Washington. He'll be the first foreign leader to visit since Trump's return to the White House. The meeting comes with U.S. and Arab mediators set to begin negotiating the next phase of a ceasefire agreement to wind down the 15-month war in Gaza.
In this meeting, we'll deal with important issues, critical issues facing Israel and our region, a victory over Hamas, achieving the release of all our hostages, and dealing with the Iranian terror axis and all its components, an axis that threatens the peace of Israel, the Middle East, and the entire world.
Let's now bring in Paul Wallace, who leads our MENA economy and government coverage. First of all, significant that the Israeli Prime Minister is the first foreign leader that President Trump is receiving at the White House since he took office. So that in itself, I think, is worth pointing out. But what are they likely to discuss when they have this meeting on Tuesday?
Hi, Jumana. I think the war in Gaza will be front and center. We're in, if you like, the middle, or pretty much the middle of phase 1 of this ceasefire, which began last month. And the big question is what happens at the end of it. The ceasefire is up in early March. Does Israel return to war, or do we go to phase 2, which should include negotiations about a permanent end to the war and the rebuilding of Gaza and other big issues like that? Benjamin Netanyahu is in a bit of a predicament. The far right in Israel largely wants Israel to return to war. They say Hamas clearly isn't defeated. That's unacceptable. Israel cannot make this ceasefire permanent. It has to go back to fighting until Hamas is defeated. A lot of Israelis don't want that. You know, they want all the hostages out, and they would be extremely upset and angry to go back to war with some of the hostages remaining there. I think with the U.S., it's a little bit unclear exactly what Trump wants, and even if he's decided what he wants. But the signals so far from Stephen Witkoff, his Middle East envoy, who Trump is very close to, are that the U.S. wants this ceasefire to continue. It doesn't want a resumption of hostilities at the end of phase one. And that's something that's going to be tricky for Netanyahu to navigate.
I remember when we were talking about the ceasefire deal, we were talking about how difficult it was going to be to transition from phase one to phase two, which sort of sets the stage for a more long-lasting ceasefire. And there you go. Even already now, there are many within the Israeli cabinet who would like to see the war flare up again because they don't think that Hamas have been fully neutralized. And actually, even if you look at the scenes over the weekend with the exchange of hostages for the prisoners, Hamas waves are still being, Hamas flags are still being waved around. There's still a very present and visual Hamas representation in the Gaza Strip.
Very much so. And in fact, those hostage exchanges, you know, where Hamas is taking hostages up onto podiums, making them wave at crowds when they're surrounded by Hamas fighters with their balaclavas and green bandanas and so on and so forth, that has shocked a lot of Israelis and the Israeli government. Hamas is clearly using that to say, we're still in power, we're still the ones that are in control of the Gaza Strip, even after 15 months of heavy strikes and ground combat from Israel. And I think that's also part of the reason the far right is so insistent that Israel does return to war, because it says these hostage exchanges shows that
they're
this
still
group
very much present.
is
Yeah,
still
but the
in
whole
power.
point of the war was to neutralize Hamas, right?
Yeah.
A slightly different tact, but also important development over the weekend. The interim Syrian president, Ahmed al-Shara, flew to Saudi Arabia and met with the Crown Prince, Mohammed bin Salman. Also significant step.
I think, yes, it is significant. It wasn't such a surprise that he chose Saudi Arabia for his first trip abroad, but it does signify that Saudi Arabia is probably going to be the Arab state that's at the forefront of dealing with Ahmed al-Shara and HTS, his group that is, de facto in control of Syria. There's lots going on here. A few days before he went to Riyadh, Ahmed al-Shara declared himself president, which was a little bit controversial in the manner that it was done. One of the reasons he did it is most likely so that he could make trips like this to Saudi Arabia to meet with other leaders in a formal capacity, because before he declared himself president, he didn't, in a formal constitutional sense, he didn't really have a position of authority.
Yeah.
But I think this shows that Saudi Arabia is going to be a key power, maybe the key power, along with the likes of Turkey and Qatar in Syria's future.
Yeah, and it's not just the Syrian leader, also the Lebanese president at some point in the next couple of weeks will also be paying his first foreign trip to Saudi Arabia as well. So again, a reflection of Saudi Arabia's growing clout in the region. Paul Wallace, who leads our MENA economy and government coverage. Thank you. Well, we'll continue the tariff coverage, I should say, next with a recap of markets. And markets are deeply in the red. The handover from Asia has been quite negative this morning. We'll have it all for you in just a moment. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasajja in Cape Town. Now, here are a few stories we are following this morning. Donald Trump says the U.S. is to stop sending aid to South Africa over its land expropriation policies. The U.S. president's comments come less than 2 weeks after Cyril Ramaphosa's government signed a new law making it easier for the state to expropriate land subject to equitable compensation.
Terrible things are happening in South Africa. The leadership is doing some terrible things, horrible things. So that's under investigation right now. We'll make a determination. And until such time as we find out what South Africa is doing, They're taking away land, they're confiscating land, and actually they're doing things that are perhaps far worse than that.
And sticking with South Africa and state power utility Eskom, they say they've suspended the rotational blackouts that started on Friday, citing a recovery of emergency reserves. Eskom implemented the load shedding, removing 3,000 megawatts of power demand from the grid after some of its plants malfunctioned. The move ended a 10-month break from outages that drew praise, but also raised suspicions about whether Eskom's turnaround was sustainable. And Jumana, I was one of those people that experienced the blackout, so I can say they did come and now they're gone. So we'll see what happens next.
Yeah, very positive for South Africa. But of course, what's not positive for South Africa is President Trump tweeting about some of the latest announcements by the president. So again, in the eye of the storm now, this is the picture for global markets as investors sort of piece together everything that has been announced in the last 24 hours vis-a-vis tariffs. S&P futures down 2%, Euro Stoxx futures down 2.7%. And coming up, we're going to be talking about the Indian budget. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Oil and the dollar surge while Asian stocks and U.S. futures plunge after Trump imposes tariffs on Canada, Mexico, and China. Canada and Mexico both vow retaliatory levies. China says it will implement corresponding countermeasures and file a complaint at the WTO. The euro and stock futures also sink after Trump says tariffs on the European Union will definitely happen very soon. Well, good morning again, everybody. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. And let me just say, Jennifer, the markets are terrified this morning.
That was a good one, Jumana. Did you just think of that? I'm Jennifer Zabasaja in Cape Town, where it's just gone at past 7:30 a.m. Welcome to the second half of the second hour of Horizons Middle East and Africa. And as you can see, I'm not in the studio. I'm at African Mining in Daba, a conference, an annual conference that happens here. We should note that about 30% of the world's critical minerals are located here on the African continent. So it is very important for industry executives, leaders, representatives to gather and talk about how they can future-proof what the industry looks like. But the real tailspin this year is the tariff talk and also geopolitics. DRC is home to a number of minerals. We know that that's part of what the fighting is going on there. But then Trump now targeting potentially South Africa and even targeting the countries that he is when he talks about tariffs, having an effect on commodity prices. That will then have a knock-on effect on a lot of the metals that are mined here. And so, yes, there's going to be a lot of discussion about what is happening now and what could potentially happen in the future and how African countries can benefit from the process.
Minerals rich, something that's got to be on his mind. Jennifer, I'm pretty sure that's a story you're going to be following over the next couple of weeks. But let's just go back to the market reaction today, because the handover from Asian stocks has been pretty significant. You can see all of these markets are taking a bit of a beating. Asia Pacific down 2.8%. Chinese markets still closed for Lunar New Year, but the rest of these markets deeply in the red. S&P futures, Nasdaq futures also down 2%, 2.6% respectively. We do have data and more earnings coming up this week. Remember, Friday, non-farm payrolls. But for today, markets are centered on what is going with tariffs and the implications on the global markets. Euro Stoxx futures also down 2.7%. Our colleague David Inglis was just flagging that if the Euro Stoxx actually does open down 2.7%, this would be its largest drop in 18 months. So again, sizable moves going on in equity markets. Not just equities, though. Flipping over, let's take a look at how some cross-assets markets are trading. The USD seeing a bounce this morning, up more than 1%. So safe haven currency on geopolitical flaring up of risk. We are seeing money pour into the USD. Two-year yields trading 4 basis points higher. This is the market prices out some of the interest rate cuts priced into the front end of the curve. And then Brent also in focus, back at $76, about 1% firmer today, on the news that Canadian oil exports are also included in tariffs, even though the rate there is 10% versus the 25% levy on other products, but still notable for the oil complex. And then Bitcoin pulling back. We have seen it drop in the last 24 hours. At one point, it was 8% lower. Now it's about 3% lower as well. Now, switching tact, India's government has announced a record $11.5 billion in tax cuts. The move will spare 10 million more Indians from income tax and provide relief to the middle class. Let's go to Mumbai now, where Bloomberg's Manaka Doshi is standing by for us. Manaka.
Thanks, Jumana. That's right. It is a pro-consumption budget here in India, but that's not the only big news this morning. India is also watching with trepidation on what next will be unveiled in this, huge Trump trade war. I have with me Sajjid Chinoy. He's the chief economist and head of Asia research at JPMorgan. Sajjid, first the budget. Will it boost growth?
Well, I think we need to understand the context in which this was set, that there were two conflicting objectives. One was to support the domestic slowdown, but the second was this is a very precarious global backdrop, as we've seen over the weekend. And so the second instinct was to reinforce macroeconomic stability. And the budget tried to walk that fine line. Now, I think we need to understand when fiscal deficits are coming down, as we expected they would because the government had given a promise to bring the deficit down, we need to be careful here. At the aggregate level, that's a withdrawal of fiscal stimulus. Now, the tax cuts will stimulate one part of the economy, which is urban consumption, which is understandable because there's an expectation that the rural consumption should pick up. Urban was slowing. That needed some support. But we need to be clear that the aggregate level, when deficits are coming down, that is a withdrawal of stimulus, which means that we'll need to look for other drivers of growth. Hopefully, monetary policy will provide some support for growth next year.
All right. So you're saying it will be sort of growth boosting, but only on the edges, on the periphery.
To be fair, this is a reduction of stimulus. So actually, the fiscal, when you reduce deficits,
so Sajjid, will it boost growth or not boost growth?
It will boost growth in some parts of the economy. It should boost urban consumption.
Look, we're going to end this year at 6.4%. Right. That's significantly lower than last year, though I know there are numerical issues there. Yeah. But, what does this mean? Will we return to 6.8?
The hope is we'll be in the 6.5% growth, because even as fiscal is tightening, this gives space for monetary policy to ease. And there are some reforms in the budget that should help. Okay. But fiscal policy tightening at the first order is a contractionary impulse on the economy. Right. Monetary policy should hopefully drive an expansionary impulse.
So now, so the ball passes into the RBI's court later this week to see if there will be. What's your expectation on rates then, on the rupee as a result of that?
So the good news is that inflation's finally coming off in India. Series of food price shocks last year, they're rolling over. I think the RBI finally has visibility that inflation will head towards 4.5%. With growth, with so much slack in the economy and growth below what the RBI thought, I think this clears the decks for, a non-trivial amount of monetary policy easing. We expect
50 bips on Thursday?
I think we'll start with the 25 basis point cut, but I think the rate cycle could be longer. But this is not just about rates, it's also about liquidity and the rupee, and the RBI has already moved on those two dimensions. We've seen a substantial injection of durable liquidity a week ago, and the RBI has been more permissive of rupee depreciation, which at the margin helps growth. So we'll need all these instruments to reinforce each other.
Okay. All right. We've seen, hours after the budget, Trump's tariff announcements, India not directly impacted as yet. Maybe some indirect impact, I don't know, on account of the 10% on China. What are you making out for the region impact?
I think the worst fears are coming true, that we're embarking now on a truly trade war. The US has imposed tariffs, Mexico, Canada, China has said they will retaliate. I think there are two channels here to monitor. One is the lesson from the first trade war was it's the uncertainty that hurts global growth. Because if we're living in this constant world, in a world where there's constant uncertainty, we don't know what's going to happen tomorrow, that's not good for business sentiment, that's not good for business investment. And global growth got hurt badly in the first trade war, and the worry is a similar thing will happen in 2025. The question is, 2024 was a year that was characterized by US exceptionalism that kept rates high and the dollar higher. The question is, do US tariffs reinforce US exceptionalism or does it undermine it? If it reinforces US exceptionalism, in the sense that US growth gets hurt less than global growth, because Mr. Trump can use other instruments to boost US growth, deregulation and fiscal policy, then Asia and emerging markets are in the worst of all worlds, because they're living with global growth uncertainty. Global growth falls, but because the US is doing relatively better, the dollar remains elevated and US rates remain high. And then you're in the worst of all worlds, because you're having to combat both macroeconomic stability and weaker growth. If it turns out that US growth suffers as well, which is what I suspect, then you get some relief because there's a global growth slowdown, but then hopefully the Fed is easing, and that opens the window for central banks around the region and the world to ease more. Last thing I'll say is Asia relied heavily on export-led growth over the last 2 years. Domestic demand in many Asian economies, Korea, India, China, has been much softer in the last year. So if the export channel is cut off because you've got tariffs and uncertainty, then the heavy lifting for policy to boost domestic demand, including through reforms, is even higher.
All right, 30 seconds to go. Sajjid, the budget hoped that through consumption, they could revive private investment in the Indian economy. But given the uncertainty that you've just described so articulately, can we expect businesses to come back to the investment table?
We need to be realistic here, because we've seen a cyclical slowing, A. B, investment is about both demand visibility and animal spirits. And in a world in which you've got so much uncertainty, a global trade war, so much excess capacity coming down from China into India, it's unrealistic to expect that businesses will jump and invest right now. As I said after the budget, India doesn't have space for a fiscal stimulus. What we need is a reform stimulus to try and drive up animal spirits domestically. Then you get some inklings of more private investment.
All right, well said. Thank you very much for that. Sajjid Chinoy there, Managing Director and Chief India Economist at JPMorgan. Back to you, Jumana, in Dubai.
Menaka, that was a really interesting interview, also really timely, not just on the Indian budget, but with the news about the tariffs that's shaking global growth, or could shake global growth, to your guest point, Menaka Doshi in Mumbai. Now, coming up, we return to the African mining Indaba in Cape Town. Don't miss our exclusive interview with the CEO of Zambian bank, Zanaco. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Cape Town. We are here in Cape Town at the African Mining Indaba. It happens annually here. And we have a guest joining us exclusively. She is the CEO of Zambia's biggest bank, Zanaco, Mukwandi Chibesakunda, here on set with us. Mukwandi, great to get you on set. So I want to start here with the trade war that has really ratcheted up this deadline that we have coming tomorrow, I believe. We're seeing commodity prices really be affected. Commodities, copper and cobalt, very important for Zambia. What do you think the knock-on effects are for the Zambian economy, potentially?
So Zambia is a mining country, and that is why we're here at the Mining Indaba. Thank you for having us. And so the price of copper impacts the Zambian economy overall. But what we have seen so far is that the impact on copper prices is not as significant as you would otherwise expect. Our hope is that this trend continues, and we don't see as much of an impact as initially anticipated. And we have a recovery of the price, because at the end of the day, the commodity prices should be linked to demand and supply rather than necessarily to sentiment. So our view is that over time, it should pan out that it settles, and we're able to still see the demand that we're expecting from a copper perspective.
What is the expectation for that demand? Is it AI and the investments into AI? Because we've also seen some skepticism around investment into AI. Where do you get that optimism from?
At the end of the day, what we have been able to assess as a Zambian economy is that overall, copper is required for other things beyond AI, for example, solar, for example, other initiatives, other manufacturing requirements. And so our view is that over the medium to long term, copper is still required. And as Zambia, we are also looking at other critical minerals and other minerals as well. We have gold that we're mining in Zambia. We have other initiatives underway to actually become less dependent on mining. So, for example, agriculture. We have arable land. We have a youthful population. We did have a drought last year, but this year seems to be going well. So we're shifting more into the agriculture space. There was a time when Zambia was actually producing maize for the region.
Right.
There is really no reason why we shouldn't go that way again. And if you look at the non-traditional exports, they've been growing over the last year or two, and beyond just the copper dependency that we've had historically as Zambia.
Right.
So much as, yes, we do have that dependency, we also recognize that there are other areas that are growing, the agriculture space, and food is going to be critical in the future. If we can play our part and begin to harvest the water that we do have, and create the capacity for non-rain fed production, I think Zambia is in a good place.
What does the rebound look like this year? You mentioned the drought that we saw last year. The economy took a hit. What does the rebound, what do you expect for
the
growth
projections from the Ministry of Finance are that will grow by 6%. We recognize there are other headwinds this year, as you alluded to earlier, some of the geopolitics and the impact, and also some of the donor funding that may not necessarily come through. But that is about 3% of our budget, which can be covered in a way through other fiscal measures. So we expect the rebound to still happen. The Ministry of Finance projections and the IMF projections are that Zambia should grow by 6% this year.
What does that mean for inflation, though? Because we are seeing inflation. It remained unchanged the last time we got the print. I think it's about 16%. Has it peaked? Will we see that start to come down?
That's definitely our hope, because we do expect some base effects. Last year was a high inflation year, but this year we're expected to begin to taper down with that base effect. The central bank has taken a view that we will come within the range that they were initially setting, within the 10% range, but we'll continue to monitor that. There's also obviously a dependency on the debt restructure process, which is still underway. And our expectation is that if all these do happen, good rainfall, which impacts our energy and our food, and the debt restructure does happen, and the overall economy begins to grow, we expect to have a good year. And as Zanaco, we're obviously very dependent on the Zambian economy, and we believe that we're also playing our role in driving access to finance, in driving products and solutions to our customers to help grow the economy with homegrown solutions as well.
What do you see as the biggest headwind, though, for that bullish case that you clearly are outlining there?
Perhaps the biggest headwind would be the rainfall this year, because we do need to recover from last year. And you do recall the last conversation we had, at that time we hadn't even seen what the outturn was. We've had very good rainfall so far. What we're hoping is that we'll see it accumulate in our dams and impact our energy positively. And we'll also see the right outturn from an agriculture perspective. Our farmers are saying that they're having a good crop this year, but we'll wait to see what happens there. I think that's the biggest dependency for our year.
And Mukwandi, you were talking about diversifying away from the mining sector, but we've actually seen more investments into copper. In particular, we've seen the Gulf really start to pour in more investments, or at least commit to that. Are we seeing that activity on the ground, or right now is it just promises at this point?
We're seeing the activity. Actually, it's quite significant, and we have about $6 billion expected to come in over the next few years. Our expectation is that this will happen. Some of the investments have started, and as Zanaco, just ourselves as a bank, we've put in $250 million in the last year or so.
Into different projects?
Into different projects. Okay. So it's not just the international investments coming in, it's also local investments growing and creating that capacity for partnerships. And we do believe that this will continue to drive the Zambian economy, at least in the medium term.
So then what are some of those projects that you're looking at? Are there enough projects there? Because that's always been the concern, right?
Yes, there are. And we've identified 3 new projects that are coming in. I'm sure you're aware of the Mingomba mine, which is in the north of Zambia, Chilabombwe, near the Congo. And we also have one in Mukushi that's just coming up, but that's another copper mine. There are various investments in Solwezi. So, for example, Kansanshi is making investments. And we believe that all these investments will actually mean that there is growth in the overall mining sector. We're here at the Mining Indaba. We expect to have further discussions with other potential investors. We believe that this handshake and partnership between ourselves as locals and the international investments will actually result in the expected outcome.
Who are those investors that are showing some interest, if you could give us some insight? We know the Gulf, as I mentioned, is interested. Who else have you heard from?
Actually, even just those are enough, but we're open to other potential partners. We're having various meetings during our time over the next couple of days. And as it pans out, we'll come back to you with what comes out of there.
Is China still an important partner, though, for investment into the country?
Yes, China is still an important investor, and so all the others, the Western partners as well. Our view is that for Zambia, any investor is welcome, and we continue to engage as and when they come in with the right solutions for the Zambian people.
And I'm glad you mentioned that, because that's a lot of the discussion around here, right? Making sure it trickles back into the economy.
That's right.
Are those discussions happening? Do you think there needs to be a rethinking of some of these agreements moving forward?
So, for example, one that I'm aware of that is impacting the community is Cobalt and the Mingomba mine. They've actually invested in the community. It's an American investment, and they've built a school in the last year. And they've also built a clinic, I think, or they are building a clinic. So that then filters through. They're creating jobs and they're creating capacity, and also the suppliers to these mines are often locals. So that is just one example. There are various other mines in Zambia that are filtering through with investments in the local economies, the local communities, and making an impact. And even we as Zanaco, as we partner with these mining companies and giants, we're also filtering through to the community. And we have initiatives underway to just have the impact that we're looking for. We're a Zambian bank.
Right.
We want to impact the Zambian people.
Well, we hope you'll come back when you get some of those deals coming through. We have to leave it there. Mukwandi Chibesakunda, CEO of Zambia's biggest bank, Zanaco, joining us here at African Mining Indaba. Now, coming up, oil advances as President Trump slaps hefty tariffs on crude from Mexico and Canada. We'll take a look at that and energy earnings next. Stick with us. This is Bloomberg.
My feeling, Jumana, is that this is a shoot first, talk later strategy by Trump. Nonetheless, it is aimed at the negotiations proceeding. And as we heard from some of the U.S. officials, through Friday and the weekend, negotiations with Canada and Mexico are ongoing and will remain the case beyond the tariffs. So what then could happen is that as and when compromise is found, the two countries promise or pledge some actions that are satisfactory to the Trump administration.
Well, that was Vandana Hari, founder at VANDA Insights, speaking to me earlier in the program as markets continue to react to these tariffs on Canada, Mexico, and China announced by President Trump over the weekend. She's saying, shoot first and talk later. This is the reaction for some of those key markets, leaning it towards the red. The handover from Asia, very negative indeed. Asia Pacific down 2.7%, S&P futures down 1.9%. European futures also in the eye of the storm, down 2.4%, as President Trump also sets his sights on Europe, potentially next as well, Jen. So really a messy Monday morning for markets.
Yeah, and Jumana, I mean, not many people here were expecting South Africa to be directly affected by that. But of course, we did hear President Trump speaking specifically about his disapproval, I guess it's fair to say, about some of the land expropriation laws that were passed here and the rand having an impact. So clearly going to continue to be something that is talked about here, down more than 1.6%. And so, you know, it's going to be very interesting because a lot of these mining executives were planning to talk about a lot of their own benefits when it comes to mineral extractions. And so tariffs are definitely going to be a part of a lot of the conversation here. But we're going to continue to follow this for the rest of the day and over the next few days. That's it for Horizons Middle East and Africa. I'm Jennifer Zabasajja in Cape Town with Jumana Bersechi in Dubai. Stick with us for Daybreak Europe. This is Bloomberg.